This video is a brief introduction to the federal income tax deduction and amortization reforestation program. This program allows you to deduct up to $10,000 annually for a qualified timber property of costs related to reforestation that have been incurred within a particular year, and to amortize any expenses beyond $10,000 of costs related to reforestation that have been incurred within a particular year, within a 7-year period over 8 years. To the reforestation of a cutover site or afforestation, say, of an old field or pasture land. And this program is applicable to those forest landowners classified as investment owners or trade or business owners. And trusts can only use the amortization deduction component of the program. A good question is, what is a qualified timber property? Well, we can look at Section 194 of the U.S. Code, and we can see here the allowance of deduction where it describes the deduction and amortization program. And we can scroll down here to definitions and special rule, qualified timber property. The term qualified timbered property means a woodlot or other site located in the United States which will contain trees in significant commercial quantities and which is held by the taxpayer for the planting, cultivating, caring for, and cutting of trees for sale or use in the commercial production of timber products. As with most things related to taxation, there's interpretation to this, and I feel like you would receive a variety of interpretations. If you have 5 different stands, let's say a loblolly pine plantation age 15, a loblolly pine plantation age 5, a mixed hardwood pine stand, a mixed pine hardwood stand, and then a hardwood plantation, could you group all those into a qualified timber property, or would you want to keep them as 5 separate qualified timber properties? And that is a matter of interpretation, and you would need to talk with your advisor about that. For this example, we're going to take the simplest case where we're simply talking about a single stand, a single loblolly pine plantation, as our qualified timber property, as a means to provide some reality to the costs associated with these various reforestation practices, as well as to help when providing an example of the calculations associated with the federal reforestation tax deduction and amortization program. We can use this publication produced by Adam Mager, Cost and Trends of Southern Forestry Practices 2020. And this example applies to the simplest case, where the landowner purchases the seedlings, but all site preparation, planting, and subsequent control of competing vegetation is contracted out. And for this example, we will assume we are reforesting a cutover site, and that the site is 160 acres. And for this example, we will plant 454 seedlings per acre, 12 feet between rows and 8 feet within a row, which will give us some degree of rectangularity. And those seedlings will be 3-star loblolly pine, bare root, which we can purchase at $60 a thousand. And many nurseries will allow you to start ordering seedlings in July, June, August for the upcoming planting season of December 1st to March 1st, or in some cases November to April. So we will order, purchase, pay for the seedlings in July for the upcoming planting season in January, when we will actually pick up or have the seedlings delivered. We will use a combination of chemical and mechanical site preparation. A chemical site preparation treatment in June and a bedding treatment conducted in November. We will then plant in January and do a herbaceous weed control treatment in April of that same year. And for the chemical site preparation treatment conducted in June, we will assume an aerial method of application. And since we are in the northern coastal plain, we will assume it'll roughly cost around $79.54 per acre. For the bedding operation, we will assume a single pass And since we are in the northern coastal plain, you can assume roughly it would cost around $155.83 or $156 per acre. And this operation will be conducted in November of the winter prior to planting. And since we are planting bare root pine seedlings on cut over land, we can assume it will cost 12 cents to plant each seedling. And further herbaceous weed control treatment conducted in April to help give the seedlings an early competitive advantage against its competitors. Since we are in the northern coastal plain, we will assume an average cost per acre of $54.39. And so here we can see our reforestation cost, the cost incurred in order to reforest our stand or to establish our plantation. And so there's a few things to point out. Notice there are 2 years, year 0 and year 1. That's because our reforestation costs are spread over 2 separate tax years, which is consistent with the calendar year, January 1st to December 31st. And remember, we have 160 acres in our stand. For our chemical site preparation treatment to be conducted in June, we assumed a cost of $79.54 an acre. And we are assuming we're going to order our seedlings, say in July or August, or it could even be September. Once again, you want to order your seedlings as soon as you can to ensure that the nursery will be able to provide you the seedlings that you desire. That is not the same as the date that you are picking them up or the date that you are having them delivered. It is just that you are ordering them in year 0. And since we're assuming that you're going to have to pay full price for the seedlings at the time of ordering, because the majority of you will likely not have enough seedlings to qualify for any special programs related to the purchase of seedlings, and thus you will have to provide a full payment at the time of ordering of the seedlings. And then we have our mechanical site preparation treatment, our bedding treatment in November. Remember, we assumed to be $155.83. And since we assumed a cost of $60 per thousand seedlings, and since we are planting 454 seedlings per acre, when you do the math, it comes out to $27.24 per acre to purchase the seedlings. And then we have our planting cost. And so remember, we assumed it's 12 cents to hand plant each seedling. And since we're planting 454 seedlings per acre, that comes out to a cost of $54.48 per acre. And then we have our first year herbaceous weed control in April at a cost of $54.39. Since we have 160 acres in our stand, when we do the chemical site preparation treatment, you can see it comes up with a total cost of $12,726.40 across the 160 acres. And thus, we have basically then, in a sense, sucked up the total amount of reforestation costs that we can deduct. And thus, the remainder is going to have to be amortized over a length of 84 months or 7 years within an 8-year period. And the terminology sometimes can get a little tricky. And then, of course, we're going to order our seedlings, and assuming we have to pay for them at the time of ordering them, which could be July, August, perhaps September. Once again, get them as soon as you can. You can see that the cost deducted doesn't change because we've already basically incurred that with our chemical site preparation treatment. So just basically that whole cost gets put into the amount that we're going to amortize. And then we have our mechanical site preparation bedding treatment in November. And once again, everybody, the cost deducted doesn't change. All of that gets put into the amount amortized. And then this is on average per year, say over the 7 years, you'd have $4,573.94. So that's in year 0. And so now we're going to plant in January of year 1. It's a new tax year. And remember, everybody, we ordered in year 0, July, August, September, somewhere around there, and we're going to actually do the actual planting operation in January. Now, it should be, I believe, if you have any cost incurred with obtaining the seedlings, I believe you can also deduct that or amortize. You can put that into your reforestation cost. When would you have something like that? Well, for instance, we're talking here loblolly, but let's say for longleaf pine in Mississippi, there's a limited amount of longleaf pine. So you may have to go to, say, here in Mississippi, you may have to go to Georgia or Florida, or you may have to have them shipped from Georgia or Florida to Mississippi because of the limited amount here. Shortleaf pine might be another species as well, where you may have to pay for an additional amount of, say, shipping cost, or you may have to pay for the cost of actually driving there to some location to pick up the seedlings. And that you should be able to deduct or amortize those costs as well. But we're assuming that we were able to get all the seedlings in Mississippi and that there were no other costs incurred beyond, say, the delivery of the seedlings, however you want to define that. We're just going to ignore any costs beyond paying for the seedlings and the actual planting in the ground of the seedlings. So once we do that, then you can see that gets put up into the amount deducted in year one, tax year one. So we still have some amount that could be deducted. And then when we do our first year herbaceous weed control treatment in April, then of course we now exceed the $10,000 that is allowed to be deducted in the tax year for costs related to reforestation, and therefore the rest, the remainder, is amortized. And so here we can see the deduction and amortization schedule. And you can see in year 0 we can deduct $10,000, and in year 1 we can deduct $10,000. In year 0 we can deduct $10,000 because of the reforestation costs that were incurred in year 0, and in year 1 we can deduct $10,000 because of the reforestation costs that were incurred during year 1, tax year 1, tax year 0. And then you can see the amortization schedule. So for the cost incurred in year 0 beyond $10,000, you have 1, 2, 3, 4, 5, 6, 7, 8 years. And for the cost incurred in year 1 beyond $10,000, the amortization is over 1, 2, 3, 4, 5, 6, 7, 8 years. And you can see that in year 0, the first tax year, and in year 7, the 8th tax year for those costs incurred in year 0, it's half of 1/7 of the amount to be amortized. And you may wonder, where does that come from? Well, we can look at publication 535, business expenses. And if we come over here to contents and we click on amortization chapter 8, it'll take us to here. And then if we keep scrolling down, we can come to reforestation cost on page 33. And then we can come through here and we can see amortization period. And then if we zoom in, you can see the 84-month amortization period starts on the first day of the first month of the second half of the tax year you incur the cost, which is July 1st for a calendar year taxpayer. Regardless of the month you actually incur the cost, you can claim amortization deductions for no more than 6 months of the first and last, the 8th tax years of the period. And that's where essentially any amount of money that you're amortizing, you divide by 7, with the exception of the first and the last tax years where you divide by 14. And that's because everybody, once again, that's 84 months spread out over 8 tax years. And so then if we come back and look at our amortization schedule, you can see that we have a total of $32,017.60 of amortization costs from year 0 reforestation cost, and a total of $74,019.20 in amortization total from the reforestation costs incurred in year 1. And so if we divide the 32,000 by 7 and then divide it by 14, and we do the same for the year 1 cost, you can see that we get our schedule. The gist of it for forestry, the way that I see it, is that you don't really necessarily pay so much attention to the 84 months. You just pay attention to the 1/7 and the 1/14, and that allows you then to produce your amortization schedule. In relation to this statement is one reason why I selected for this example to do the chemical site preparation in June, because that is before July 1st. So are the costs associated with the chemical site preparation conducted in June, is that started to be deducted and amortized in the same tax year as July 1st? Well, yes, and that, to me, my interpretation of this statement is, even though the chemical site preparation treatment was conducted in June, if all of its costs cannot be deducted, then it has to be amortized, and the 84-month period will start July 1st of tax year 0, even though the chemical site preparation treatment was conducted in June. Others recommend doing chemical site preparation treatments, or applications you could say, in July, August, September. I also selected to do the chemical site preparation treatment in June because often you have to do treatments or applications or operations when contractors, applicators, vendors are available. And sometimes these folks are not available at the exact time that you want. So you may have to adjust your timing of operations to account for the availability of folks that can, as I said, do certain operations. And as we can see, it may become more and more difficult to find credible and available vendors, contractors, and applicators. So now we can look at what is the likely amount of estimated recovery of reforestation cost, you could say, or in a sense, the amount of offset reforestation costs, or the amount of reforestation cost offset through this federal tax reforestation deduction and amortization program. So in here we can see our amortization schedule once again, and then we have the total amount of cost deducted, the total amount of cost amortized based on the reforestation cost incurred in tax year 0, and the amount of reforestation cost amortized, say, based on the amount of reforestation cost incurred in tax year 1. And then we have our grand total of the reforestation costs for our 160 acre cutover site for love pine plantation, right, planted at a density of 454 seedlings per acre. The amount that you will actually, in a sense, recover based on the amount of reforestation cost incurred in year 0, and the amount of reforestation cost that you could say that you will actually recover based on the amount of cost incurred in tax year 1. And then your amortization schedule based on the amount of reforestation cost incurred in year 0 and the amount of reforestation cost incurred during year 1, or tax years 0 and 1, the amount of reforestation costs amortized, say recovered in a sense, over the 8 tax years, 84-month period, 7-year period. And so the amount that you will actually recover is going to depend on your federal income marginal tax rate, or your bracket. And for tax year 2021, most of us will likely be either in the 22% tax rate or the 24% tax rate. And so in this case, you'll see that actually a higher income tax rate gives you more benefit from this reforestation program. But by no means do you want to be in a higher income, federal income tax rate or a bracket. It's just in this case, it actually helps to, it's actually a benefit to have a higher tax rate. But as I said, everybody, you do not want to have a higher income tax rate in general. But we can look at the 24% income tax rate. And here's our grand total cost and our, say, estimated recovery cost or offset, reforestation cost, the amount of reforestation cost offset. It's $14,264.83, and that is 24% of our reforestation cost incurred to reforest our site over tax year 0 and 1. And if you had additional treatment, say in year 2, and you could justify them as reforestation cost, and you feel the IRS would agree with you, then you could also receive some tax benefit for those costs. Nonetheless, for this example, we just assume we have reforestation cost over 2 tax years. And then if we change that to 22%, you can see the amount recovered, the amount of reforestation cost recovered, offset, however you want to kind of define it or term it or describe it, is 22%. And that is, of course, consistent with your income tax rate based on your tax bracket. So you can see this program provides a fair amount of recovery of your reforestation cost, and you should use it if it's applicable to your classification and to your overall management objective, and in terms of maximizing your financial returns based on your investment. And many states have reforestation programs as well, in addition to the federal reforestation program. And you would need to take this into account in terms of federal cost shares or say incentive programs provided by private entities or state reforestation programs. And then we can talk briefly about maybe moving the timing of these operations such that we can fully take advantage of the amount that we can deduct. So to me, everybody, I would rather deduct than amortize. Why? Because deduction allows me to recover my reforestation cost, in a sense, today, this year, not 1, 2, 3, 4, 5, 6, 7 years, say 8 years into the future. And if you know the time value of money, interest rates, inflation rates, right? Would I rather have $1 today or $1, say, 4 years from now, 6 years from now? And inflation, right? With inflation going up, essentially, to me, $1 today has greater buying power than $1, say, 4, 5, 6, 7 years into the future. And then interest rates. I could say take my $1 today and put it into the bank and earn interest on that $1. When I recover reforestation costs, say 6 years from now in this program, I don't earn any interest over those 6 years. And instead of putting the money in the bank, I could put the money into capital improvements of my forest, of my land, of my property. I could put it back into, say, enhancing my forest. So there are a variety of reasons why I'd rather have a deduction than an amortization, than an amortized recovery of a reforestation cost. Now, the amortization is better than nothing, right? So my point is, here we have 160 acres, right? So for the most part, any operation that you do in whether tax year 0 or 1 is almost going to suck up that $10,000 deduction. And so it really doesn't benefit you much in terms of how much you can deduct rather than amortize to, say, move operations from one tax year to another tax year. But let's say you had 40 acres. It may be beneficial for you to, say, move the purchase of seedlings into year 1 or the planting of the seedlings, say, in year 1. Say, like to plant in December rather than, say, in January, February, March. To plant in year 0 rather than year 1. Now, purchasing and ordering the ceilings, that can be a little tricky, moving that from year 0 to year 1, because often you need to order as soon as you can to ensure that there is the supply of those ceilings. As I said, you can wait until, say, January, February, or March of tax year 1 to purchase your ceilings, but you're always going to run into the issue of they may not have the supply. You just don't grow a ceiling in a matter of a day. You have to sow it and then, in a sense, right, grow the ceiling over time. So think about maybe how you can change the timing of these operations to capture the whole benefit of the federal reforestation tax, deduction, and amortization program, but never lose sight of the biological impacts, the impacts that you may have, the chance that you may reduce the probability of a successful reforestation effort by adjusting the timing of these operations, or say the quality of the ceilings or the quality of the work or the intensity of the site preparation, trying to save money, but at the same time perhaps creating issues with your reforestation process being successful. So there is a balancing act between many aspects or angles to reforesting a site. Thank you.